There's a very important question for businesses today. Are they ready for VAT? So what does readiness means to them? So we have chalked down a list of 10 points which can help them understanding what readiness means. Has your management shown any interest in implementing VAT within the organization? I know it's a weird question because management is already and always interested in implementing VAT. But there are some signs of it. For example, is somebody appointed as the VAT champion in the organization? Rather, we can say somebody's crowned with the VAT implementation. That's the first thing. It shows the interest of the organization. Second, is there any steering committee formed? Why? Because VAT is an organization-wide issue. Just saying the finance director that this is your business and it's your baby, you have to do it. It's not going to work. So starting from the senior management, down the line, everybody has to be part of it. The second test of assessment is to see whether the VAT capabilities rest within the organization or no. If not, then this is the right time to go and see and find out the tax consultants, bring them on board and try to find out what exactly are the VAT requirements with regard to your business model. Now the third point is, have you checked where your business model falls within the tax and the legal system or the tax legislation? For example, are your products standard rated, zero rated and exempt supplies? We have most of the information which we need with regard to the tax and the tax legislation. So on the basis of that, we are in a position right now to decide that where our business model falls. Second, are we going to get registered as a group in the tax system or no? If yes, then what is our group? What is the ownerships there? And will it suit us or not? The fourth point is readiness in terms of accounting system. It's time to review your ERP. Design the back end of the ERP, which is the function of an accountant and the finance professional. So you need to understand the tax system well, the flow of information, go back and see your business model and see that what type of accounting transactions you're posting in your system. The best way of doing it is running a system parallel. Think that, let's say, if there's a tax system today, what should ideally be your accounting system in terms of reporting? What should be the flow of transaction, classification of transaction, how your ERP should look like, and what are the challenges there? It's the right time to do it. The fifth part is very interesting, and that's the procurement analysis. One of the major impact on VAT is on the input VAT. So you need to redesign and discuss your procurement model in depth with your procurement team. You need to see that how procurement is going to have an impact of tax on them. What are the policies that you need to revisit? Let's take an example. You need to revisit your expense policy. You need to see that what is the real impact of VAT on your imports, on your purchases, and how much input VAT over a period of time, let's say on a quarterly basis, you're going to pay to your vendors. So this is a part of impact analysis that the organization should do. The sixth part is the vendor analysis. You have to go back and see today who your vendors are. Will they get ready for VAT registration or no? Are their accounting systems ready? Are they working on VAT? Are they really interested? They're a part of your supply chain, horizontally and vertically, so you have to take a quick look of them. There are some vendors to whom you'll have to offload from your business system. Who are they? What's the reason? What is their readiness in terms of VAT? Inconsistent supply chain partners, inconsistent vendors, dicey vendors, non-registered vendors, discrete expense policy from the retail shops and retail system. These are the biggest challenges that business has to see. Have you done this? One of the biggest challenges that businesses will face, that's our seventh point of readiness, and that is the review of your business processes. Interestingly, none of us try to read the process in depth. We use very stereotyped processes which actually do not carry VAT which is an obligation for you. As a seller, you have to recover VAT from your buyer. So this is the right time to go back and see your various contracts, see the technical points in it, the legal safety for the company in terms of VAT implementation. You have to see that how and at what point of time the incidence of VAT will be there, because that is a direct impact on your cash analysis. So contract reviews are very important. Another important thing is that those organizations who are making new contracts today, they have to incorporate the tax part in their new contracts. Apart from this, for renegotiation, you need to do a lot of homework. So have you done that? Are you ready for that? We have to pay VAT input. We have to collect VAT from our customers. That's the output VAT. So it's a right time to discuss the incidence and point of taxation of VAT in terms of your sales transaction. Ideally, companies should have a very clearly and well-defined VAT policy that need to be informed to the vendors. They know that this is the incidence of taxation in a business transaction. This is the time when they have to pay. Especially the challenge is when you're doing a credit transaction. You have to see that at what point of time you have to charge VAT to the customer, take and deposit it with the government, report it. So these are the challenges and the sales challenges, especially with regard to cash flow as well, that businesses need to work out. I believe by that time the tax registration information will be available, and I believe by the time you'll have reached at the last quarter of 2017. So you have to go back and you have to see and make decisions. Are you going to get registered yourself as a company? You're going to hire a consultant who's going to represent you against the Federal Tax Authority. And what are the activities? One of the challenges which I've seen with consultant with companies is with regard to the business activities which their tax with licenses carries. So it means you can claim all input VAT which is related to your business. So you need to have a quick review of the legal contracts in terms of your licenses, in terms of registration, the group part in it. Get ready for tax planning. Once you are done with everything, now it's time to discuss the roles and responsibilities of different departments head within the organization, especially the procurement team, sales team. Your finance people need to know there must be a compliance guy who need to see the implementation part of it, make it sure that the tax is being implemented in accordance with the requirement of the legislation. So it's about the division of roles and responsibility that need to be given to the team members and written. Formal sign-off must be there, and the project must be implemented in all practical purposes. But it means there must be milestones that need to be achieved, and there must be some outcomes at the end of the day. So finally, we need to take a quick look at what we have done in terms of readiness assessment. Our ERP is ready, accounting part done, processes aligned, procurement and sales team are ready, corporate tax policy is written and well defined, compliance requirement double checked. Time to go live.